Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 12th of December, Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. Usual run through in here today. Going to keep it brief. Clearly today, all about CPI. Kind of got it right yesterday. Looking for consolidation with maybe a positive spin. Kind of what we got, right? Not much price action, but the market continuing along its still positive path. And and keeping that positivity as we go into today. Carrying through on the overnights, looking relatively positive, and setting up for, I think, a bullish extension into today, into this week, and through year end, and maybe early January. So, all eyes on CPI. You can see on the calendar here, we've got that coming up in 90 minutes. 90 minutes, 59 minutes, excuse me. Remember, no trading, no orders in the order book, and no open positions 2 minutes before and 2 minutes after the data, okay? Zero tolerance policy on that. It's all over the website. It's everywhere we can put it. Forums, chats, Discord, emails have been sent out. So please, no trading 2 minutes before or after the data today. We have had some data out of Europe this morning. German, ZEW and European ZEW surveys in here. See the German in here on the current conditions slightly missed, but the economic sentiment, which is usually the headline data in here, beating expectations for both Germany and for the Eurozone as a whole. On the UK side, the unemployment report in here coming in line with expectations. You see the claimant count in here, only a slight miss on the claimant count. The average earnings actually index plus bonus in here actually below expectations, although that's in red. That's negative for the currency, but positive for the economy, because that's going to feed into potentially slowing inflation. So UK pay growth slows, but Bank of England seen keeping rate high. So so slowing pay growth data in here seen as a positive, really. Remember, we do have obviously all eyes after the CPI today onto the Fed on Wednesday, and then we get the trifecta of central banks in here: Swiss National Bank, Bank of England, and the European Central Bank, all on Thursday. Looking at the charts in here that I put out overnight, you can see it was that positive spin in here, prodding higher, maintaining the bull trend, maintaining this breakout in here. As I said previously, this looks like a big, massive flag pattern that we've effectively had in here since Thanksgiving. So I think there's real risk of a significant Santa rally going into the end of into this week, next week, and then through into year end and maybe beyond. And Nasdaq finally playing catch up in here, taking at the peak in here. I think the important thing in here, actually, just want to touch on, not on gold continuing that blowout top, but oil has rebounded and faltering back lower again in here this morning. So the more we have oil continuing in this downward path in here, continues to help stocks higher. On the bond side, this correlation between bonds and equities has broken down a little bit in here, because bonds have sold off and maintained a negative bias. We have had a little pop in here to the upside in here today, but you can see 2-year notes significantly off the highs. And even when you go to the 10-year in here, the 10-year has held that trend line, really importantly though, has held the trend line and pointing back higher. Overnight last night, I had a little bounce off that trend line and higher again in price, lower yields this morning. So a potential positive. But, the market is kind of, I think what's happening here is when bonds go down in price, higher in yields, stocks are going sideways. And if we can get another push higher in bond prices in here, I think it could really help stocks, particularly, through the CPI and through the Fed today. And we can see that in here with the US 10-year in here. Again, in here, that was the 10-year on the price. You look at the yield with rollback low, you can see that potential trend line coming down through here, holding that trend line and pushing back this morning. This is this morning's data, back to lower prices, higher yields. The other thing I wanted to note is, and we spoke about this yesterday, when we spoke about Schnabel in the ECB member in here, who was one of the hawks, shifting to slightly more dovish last week, and we've had this explosion higher. So this push higher. This is the German government, the Bund future, which is based around really mostly the German government bonds in here. And what we're seeing is that with this strong rally, as we saw on the US, but remember the US hasn't rallied. If If we go back to the charts in here, so this is like the 10-year. So the 10-year hasn't moved higher in here. We've actually gone lower and then just starting to bounce in on the US futures. And if we look at the Bund future in here, it continued higher last week, and that's because that dovish shift perception around the ECB, and we saw a setback, and we've seen a rebound in here going into today. So Bunds in here is continuing to point higher. So just want to make the point here, this is not just a US market. Global markets in here trying to continue to point to higher prices on the bond side, which is lower yields. Okay, so it's not just the US. There's a global shift to lower yields, and we're getting that in here. So this is obviously this push higher. Again in here in bonds in here to lower yields is potentially going to help out stocks in Europe. And we've certainly seen that this morning. If you look at the quick overnights in here, slightly up in here, FTSE slightly higher. The German DAX actually slightly lower in here this morning, but the French CAC slightly higher. So that bond rebound and European bonds being helped by last week by the significant push higher in European government bonds. 5 things to say today. There's not much really in here. Inflation expectations in here going into today's CPI. Google owner Alphabet lost an antitrust cause with Epic Games, maker of Fortnite, a chip probe into Nvidia and China. None of this is impacting what we do in here. Oracle sales growth in its cloud business slowed on some Oracle data, and oil wavering. There was an attack on a missile attack on a tanker in the Red Sea, and come from Yemen. And but in here, oil continues its downward path in here at the moment. So none of that particularly interesting in 5 things to start your day. Bonds are up this morning. We've already said that. The dollar down. Bonds up. Remember, higher prices, lower yields. Lower yields negative for the dollar. CPI in focus, obviously, and they're also focusing there on the UK wage growth slows before Bank of England on Thursday, and Oracle slump in here. But futures still pointing up, even though Oracle slumping. Futures heading higher. We'll just mention that ahead of the inflation data. And just a couple of bigger picture stuff in here. Goldman Sachs says buy the dip if stocks dropped after repricing Fed cuts. So Goldman's in here and becoming a little bit more positive in here and looking for any kind of dip in here to be an opportunity to buy. So in bull mode, similar to myself, and oil slips in here this morning. So again in here pointing south. Ahead of CPI and then ahead of the Fed tomorrow. As again, this is hardly changing until when you're pretty nailed on for no change tomorrow, and then pretty much nailed on for no change in January in here. But we go to March in here. Remember, this has been as high. These two over here have been as high as above 60%. Yesterday we're down closer to 40%. We're back up to like 46, 47%. Fully expecting through Fed and potentially through the through the CPI and FOMC for this to push back higher. That's my base case, is that we're going to get more of an anticipation of rate cuts again, which should send stocks higher. If we don't get that, if the Fed are very, very cautious and staying very much on that, keeping a foot in the hawkish door, that's going to be the real risk in here. And obviously we're watching the CPI data. The CPI data could be a little bit of a damp squib today. Why? Because you got the Fed straight after, right? So you have to really be bearing in mind that we will get initial moves on the CPI, but unless it's really out of line, it's probably not going to impact too much, because we're going to then get, obviously the Fed are going to see those numbers, they'll discuss those numbers, and then we're going to get a reaction from the Fed. So the market may not react too aggressively after the data. So just keep that in mind in here, because we do have the Fed straight after the CPI. Well, not straight after, but within a day and a bit of the CPI data coming out today. So on the overnights in here, we had Nikkei's pretty much flat. The Hang Seng jumped 1%. European data we've already looked at this morning, hovering either side of unchanged, and US stock indices slightly higher this morning, having had a decent prod to new highs in here yesterday, nudging still higher this morning. Nothing really to add in here. To me, this just looks like, say, here's the 30-minute chart in here. The market continuing to push higher. This is the Nasdaq having broken out the top of the range. On the overnight in here, very resilient sideways and pushing back higher now. And on the bigger picture, really interesting the way we were flirting with either side of that 13-period EMA on the daily chart, and then kind of ended up using that as a trampoline to bounce from in here. And we took out the highs yesterday from the end of November there, and also then pushing above the highs back in here on the futures back in here from earlier this year. If we go on the March contract, if we look at the the ES. Similar thing in here, we were speaking a lot about this 13-period EMA working really well on the ES. Again, we use that as a launch pad, not only to take out the highs in here. We're not at the highs in here. We are on a new high for the year on the cash market on the S&P, but not yet. So this is going to be a targeting up here on the March contract now. I'm looking at the March contract going forward on the analysis on the charts we looked at earlier as well. 47.30 8.5. I think that's doable through all the data and events we have this week. So between now through Thursday, I think we could be up towards this kind of area here if it goes the right way, right? So that's my view going into. I'm unlikely to get there today, but potentially through the Fed tomorrow. Again, in here on the overnights, we broke higher yesterday, and it's been sideways overnight, but now a dip and a rebound and looking bullish ahead of the data. So my view is buy the dip on the data if it dips. Okay, if it breaks to the upside, just go with it. That will be my view. If it dips, there might be a quick sell trade in here, but I'd be more looking for to buy. If it sells off and stabilizes, buying into the US equity cash open between the data release and the US equity cash open, looking for it to bottom out, turn, and then looking to buy into the cash open if it does dip on the data. That's just my view, though. Don't take that as read. And we'll see, and we'll pick the bones out of all of that tomorrow. So I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you to look at CPI tomorrow and do a run-in ahead of the Fed. And remember, no trading 2 minutes before or after the US CPI data release today.